News Network, and you're watching News 9, English news as it should be.
A very good morning. You are watching News 9. I'm Karthik Malhotra, and we're bringing you a special edition of Morning Brief at 9, where we decode budget for Bulletproof Bharat that was presented by Finance Minister Nirmala Sitharaman yesterday. First up on the show, we'll be joined by Dr. Arvind Virmani, member Niti Aayog, who's going to give us the macro picture and help us understand the vision for 2030-31, where India aims to attain that debt to GDP ratio of 50%. Thereafter, we'll be joined by Feroz Aziz, who's going to tell us the market mood, because yesterday we saw a fairly strong negative reaction on the stock market. Nothing's likely to improve in the near term. Followed by that, we will be joined by Mohit Gang, who's going to tell us how those little changes that perhaps went unnoticed could go ahead and impact your finances and your money. And finally, we'll try and get a critical analysis with Srinath Sridharan, who will give us the other perspective on Budget 2026. All this on this edition of Morning Brief at 9. We're calling it Budget for Bulletproof Bharat. Finance Minister Nirmala Sitharaman presented her third consecutive budget yesterday. Now, 6 years ago, cut back to 2020, Nirmala Sitharaman delivered the longest budget speech in India's history. Back then, in 2020, it was 2 hours and 42 minutes long. But it was filled with excitement. The new tax regime was introduced. The dividend distribution tax was abolished. Deposit insurance was hiked from 1 lakh to 5 lakh rupees and a lot more. But this year, the budget speech was much shorter at just 1 hour and 23 minutes. But excitement seemed absent yesterday. Some call it boring by some accounts. Others call it conservative and not as energizing as what India had apparently become accustomed to, especially compared to the year before, last year, 2025, when sweeping tax rebates propped up consumption to as high as 60% of India's GDP. Now, the Finance Minister has kept key tax slabs virtually unchanged this year. A hike in security transaction tax for futures and options seemed to have spooked market participants who are questioning the timing of such a move when foreign investors are already on exit mode. Now, yesterday, Nifty 50 slipped as much as 2 1/3%. Sensex lost more than 1,800 points in the Sunday special trading day on Budget Day. Budget 2026 was expected to focus on job creation, providing a fillip to manufacturing and creating a scenario for foreign capital to come to India. Some argue it did not live up to expectations, but others say boring is not bad, conservatism is not complacency, and budget energy is that of a test match. Slow but sure singles, not necessarily hitting the ball out of the park, being the need of the hour. Now, some of the highlights of Budget 2026 include a capital allocation increase to 12.2 lakh crore rupees, component manufacturing incentives of 40,000 crore rupees, an MSME booster of 20,000 crore rupees, and continuity of the India Semiconductor mission with a new 2.0 avatar. Now, add to that the fiscal glide path of 4.4% deficit target for this year, reducing to 4.3% next year, and a debt to GDP ratio of 50% by 2030-31 are all on expected lines. Artificial intelligence got a shot in the arm with the tax holiday for cloud infrastructure, investments in India, and safe harbor clause for the IT sector, all being seen as welcome moves. But no expansion to PLI schemes, no mention of employee-linked incentives, and silence on climate financing have dampened the sentiment. While Prime Minister Modi hailed the budget as reform-oriented one, no big-ticket announcements by the Finance Minister made Budget 2026 perhaps the least memorable one in recent years. So let's decode the numbers and let's really delve deeper into the math behind Budget 2026. Joining me on the show is Arvind Virmani, member Niti Aayog. Dr. Virmani, thank you so much for your time, sir. First up, straight off the bat, according to you, is Budget 2026 indeed a growth and reform-led budget, or have we missed out on an opportunity to deliver to the rising aspirations of India, sir?
I think of fast, sustained, inclusive growth. So, what are the elements of it? So, One is macroeconomic stability. Everybody, you'll recall for 50 years we all talked about macroeconomic stability.
Right.
Now we have that framework and we have stuck to it. So that we now take for granted, but it's very important to note it. And you know, when we had a shock in the pandemic, as a result of the shock, you have fiscal effects all over the world, and now we brought it back down. So this commitment and faith of the government in macro stability is very important underlying foundation on which everything rests. The second part, which of course has accelerated 3 months or so, it's happened over time before also, the IBC, GSTs one and so on, but it has accelerated, but it has two parts, right? There is a structural reform part, which is the part which has accelerated, and there is a process reform which is going on, like decriminalization, etc., which is goes on. So the budget does take up these issues because it can only do so within the items which are under its preview,
Right.
which is taxation and the financial sector. So
Sure.
in taxation, we had the income tax law, and the rules and the forms, etc., have to be built, and they have to be simple. People often complain that between the law and the actual application there's a gap, but so the finance minister has tried to ensure that that simplification goes down to the ground. And similarly on financial sector, last budget had announced that financial sector, non-financial sector would happen outside, which has been happening, and the financial sector would be done within the government, within the finance ministry, which is right because it's under them. And so this high-level committee on banking reforms and the other committee on non-banking stuff. So these both process structural reform announcements in the sense of committees and process will have effects. So I think these will actually promote what I have said, the sustained fast economic growth. There are also aspects of employment, etc., which we can discuss, which relate to inclusiveness. So in the budget speech, there are elements of the importance of skilling.
Right.
I have a one-line thing that skills,
Go ahead, sir.
jobs and skills are two sides of the same coin, and secondly, the importance of services in generating employment is recognized and showing that how important it is.
Sure, Dr. Virmani. Some will argue that perhaps not enough has been done for job creation in budget 2026, but we leave that for later. I want to understand from you the fiscal deficit financial year target at 4.4%, dipping to 4.3% next year, and we are looking at possibly, the roadmap to 2030-31 with a debt to GDP ratio of 50%. I want to understand from you, Dr. Virmani, are we looking over the next 5 years at more tax revenue for the government or less government expenditure on schemes? How do we attain that debt to GDP ratio?
Yeah, so getting down the fiscal deficit means both, right? You have to reduce expenditure, rather increase expenditure at a slower rate than the GDP and increase taxes or disinvestment at a faster rate. So I think there was an expectation last budget that or perhaps it even said that they were drawing up a slew of proposals for disinvestment. I think those probably have been done by now, and the pace of disinvestment will pick up, which is why some people have noticed the difference between the net debt mentioned and the gross. So the difference would be the privatization revenues. So I think what the importance of a flight path, which the finance minister has been clear. I said this last budget also, the ministry has been very clear that they will follow the flight path which had been laid out several budgets ago. I think the previous finance commission had approved that and suggested it, and we followed that since then. Now, what is the macroeconomic importance of this? In a period of uncertainty, generally if there is fiscal restraint, this gives more opportunity to the monetary authorities to address monetary policy towards the shocks, right? So if monetary policy needs to be loosened, keeping on that flight path or whatever you want to call it, of the fiscal deficit and the debt GDP goals, then gives enough room for the central bank to address it. And that globally, across the world, across time, we have seen is the best way actually to address these kind of shocks, which are external shocks. External meaning coming both from outside the country, but also external to the, they are not related to domestic policies as such. They are, for example, drought
tariffs.
Shock or climate shock, the external shocks in that sense.
Right.
So, that's the importance of sticking to the.
Dr. Virmani, just a few minutes ago, you were in fact talking about jobs and skilling being, two sides of the same coin. I want to now get your view on the MSME sector, because we've seen there have been critical reductions in import duties, which are going to lead to better export value for India and a cumulative budgetary allocation to the tune of about 20,000 crore rupees. Sir, with this outlay, how soon can it, in your opinion, lead to real job creation?
So you have to see that, in MSMEs we have some sectors or sub-industries which are have very high quality, which are exporting to the world, like certain types of handicrafts, textile items, etc. But what again the Honorable Prime Minister has emphasized is that we need to raise the quality of the whole system, the question is, what is the thing? We've had several programs to provide technology, etc., but it's a package. So it has to be both the skills have to be provided, where much more emphasis is being given now. The capital investment has to go with it, because technology doesn't come in the air. It is often embodied in the manufacturing process, which means machines, corresponding skills, corresponding components which go into it, right? So all this requires more risk capital. So that is where that fund which you mentioned, which is in this budget, that equity fund will provide this aspect which perhaps has been missing. People talk about credit to MSMEs, but that credit is really working capital. So the idea is that all this stuff which has to be done together, skilling, new types of components, machinery, etc., requires increasing their ability to take risks. Of course, for startups, we have already been providing many funds, but perhaps this gap was seen in MSMEs to help them with this missing link, so to say, because it's a whole package. So I think that will help them take these risks of improving their quality, because once you improve the quality, you also need to charge higher prices. Right? So there is a little bit of risk which has to be taken by every MSMEs to when they are improving the quality. So that is the idea, to provide them with the risk capital, which will kind of help them along with all these other programs which are already there.
Okay, and let's talk about the risk cushion, sir, because at some level one also must understand the China factor. So we also heard Budget 2026 try and offset rare earth dependence on China. Do you think, by way of course of tax concessions on importing critical machinery which goes into mining of these critical minerals, but overall, do you think this also helps us not just offset our dependence on China, but also make us more competitive as far as our exports to, let's say, the US are concerned in the advent of the US tariff threat?
Well, there are two very different questions, because rare earth dependence is a problem for every country in the world, right? There is one country which has the processing technology and the processing manufacturing system. Processing is part of manufacturing in the way I look at it. The actual processing, not the minerals. So processing 80 to 90% of rare earths are processed in one country. So that's a high, very, very high risk. It's a monopoly basically, which is a very high risk for every buyer. So this is not an India problem. This is not a US problem. This is a problem for the world. So various alternatives, various ways are being tried. And the countries fortunately recognize, all of us, we have to do it together, because you cannot take a monopoly which 80-90%, which controls the processing system, which controls 70% of the rare earths minerals as they are mined today. Of course, there are alternatives. So what we are doing is filling in the gaps in our own system.
Okay.
But eventually everybody will have to cooperate. As you know, our foreign minister, external affairs minister is traveling to the US to discuss with other countries, including the US, what to do. But we have to, just as with reforms, we may do external FTAs, etc., but you also have to do your own reforms. So the corridors which are being suggested, changes in mining laws, changes in the ability of companies to recycle rare earths, to extract the rare earth back from the materials, etc. That whole policy structure and the infrastructure has to be built to kind of accelerate this process of creating alternative sources of metals.
Right.
And I think, again, as mentioned by Honorable PM, the magnets, which are critical to so much of industry.
Of course, so there is, of course, the domestic side, but to the question of export competitiveness, especially with regard to FTAs and offsetting US tariffs, talk to us about the importance of, let's say, industrial parks that you had just mentioned some time back.
So now that is really the issue is of industrial policy and many different parts of the thing, but I'll just mention a few. We have been talking, the PLI came years ago, right? It started several years ago. FTAs are first, if I remember correctly, our first FTA with a developed country was with Australia, I think 3 years or so ago. So these are all elements of the industrial policy which all have to fit together. The reforms which are accelerating, which we went and looked at. Of course, the infrastructure had been improving for some times, but some new elements which are mentioned in the budget, for example, local infrastructure. So one of the things we found is that on our travels was that the mega parks and all were being set up, but the historical or the legacy industrial areas were being relatively neglected. So the budget has tried to correct that. So the industrial policy has many elements, and FTAs is one part of it. And the whole idea is to de-risk, right? To develop resilience in manufacturing, so that no country, in a sense, one country can disrupt.
Okay.
So we've had different disruptions, right? Rare earths disruption came from one country. Import tariffs came from another country.
Sure.
So you need a industrial policy which has many elements. I mean, we don't have time to go into all elements of it, but that is part of the process which is going on now for several years. And as we discover new gaps in a way, we try to fill them. You've already, just to remind you, the reforms are not only at central level but also at the state level. Again, Honorable PM has talked about them earlier. How and the economic survey. What I have been surprised personally is this data which I had seen earlier, that 76% of the individual reforms which had been identified at the state level have already been done, at least from the information given by state. So the point is, all these elements go into making an industrial policy which will be successful. and that is our response to these kind of disruptions coming from individual countries.
All right. And what about making our policy also future ready, sir? My final question to you is around AI infrastructure. All that we heard in Budget 2026, is it enough to make India AI ready by the turn of the decade, sir?
So, this is, see, AI is a completely new field, right? So, what we had talked about industrial policy is going to produce results in the next 10-15 years. I am confident of it, the structure which we have already set up, and we keep refining. AI, quantum, etc. Have long lags, right? So, it will probably take at least 10 years to get to a stage where it is actually producing profits and productive goods and services, right? Not all, but we can't wait till then. It can't be produced in one day. It takes time. So, what our approach is to set up the policy framework to provide the public goods which are needed. We've all discussed UPI as a public good for digital, but for AI research, for example, the key thing which we learnt was that they require huge amounts of computing power, and for an ordinary professor in a university cannot get it. So this scheme was launched to provide computing for AI research as a public service, right? So these are the kind of things, but they are new. It's not obvious. It is not something which you can say, hundreds of advisors will tell you the same thing.
Right.
Because AI is so new, because the economics of AI is new.
Sure.
So it's like that famous phrase, crossing the stream by touching, feeling the stones at the bottom.
Right.
So, the AI providing the public services which will help accelerate this process, and then of course creating the environment which the private sector will then take forward and produce the products and services which will actually make profits, which will give jobs.
Of course. Well, let us leave it at that for now. Dr. Virmani, as always, pleasure having you here with us on News9, and thank you so much for all that input on Budget 2026 and decoding it for our viewers. With that, we will slip into a very short break, but coming up on the other side, a mood check after the massive fall we saw in markets yesterday with none other than Feroz Aziz, the joint CEO of Anand Rathi, who is joining us after this short break.
यार सोच रहा हूँ पॉलिसी बाजार से टर्म लाइफ इंश्योरेंस ले लेता हूँ ताकि मेरे बाद फैमिली को पैसों की कमी ना। तू भी ले ले।
यार अभी तो यंग है यार, बाद में देखते हैं। आजा चल।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
घर है वही जहाँ सब संग हो, रिश्तों को रंग दो, दुनिया को रंग दो।
Birla Opus Paints.
When drinking water turns deadly, it demands answers.
What is really going on there?
News9 brings you
Imagine water that you drink.
contaminated drinking water in Indore, revealing a disturbing link to at least 15 reported deaths.
Typhoid outbreak in tribal areas. 104 patients.
After 15 people were killed.
Foul, frothy water from taps.
You would assume it's safe. It turned deadly.
Because how is that happening?
Different cities. One national crisis. Bharat. Quest for clean water. News9. In your interest.
एक और फैमिली ने रखा कदम अपने नए घर में, टाटा कैपिटल होम लोन्स के साथ।
Welcome back. You're watching News 9. We are decoding budget for bulletproof Bharat and especially the kind of action we saw in the stock market yesterday. But we'll come to that in just a moment. Meanwhile, Asian markets have opened the week under pressure, largely mirroring losses in Wall Street futures as investors grappled with sharp volatility in silver and gold prices. And then, of course, the standout pressure point was in precious metals. Silver extended its dramatic sell-off. Prices were down another 5% at one stage, coming after a staggering 30% plunge on Friday. Turbulence has rattled broader risk sentiment across Asian equities. Equity sentiment in Asia also reflected developments in the United States last week because markets are still digesting the implications of Trump naming Kevin Warsh as the front-runner to become the next chair of the Federal Reserve. Meanwhile, Indian markets yesterday saw perhaps, as expected, one of those weaker sentiment days in the run-up, and then, of course, on the day of budget, despite being Sunday as markets were open. Yesterday, we saw markets tumble. In fact, Sensex was down about 1,800 points. Nifty also pretty much in the same steam had lost about, more than 2%, 2.3% or so. Things are looking a little better this morning. Nifty and Sensex both in the green, but there still seems to be some pressure on the small cap space this morning. Volatility, as expected in budget season, is a little high. We are looking at levels of about 15.5. The heat map is looking much better today compared to what we saw yesterday. The Nifty 50 heat map was a complete sea of red yesterday, but this morning we are seeing some improvement. In fact, stocks of Reliance Industries, L&T and Adani, are all pretty much in the green territory this morning. Feroz Aziz, we missed you yesterday, joined CEO Anand Rathi, but it's great to have you with us today and just help us understand, the budget sentiment that seemed absent and, of course, all the sort of negativity around raising the STT on the FNO derivative space sort of spooked investors, some were saying yesterday. But this morning, things are looking a little better as markets are digesting the larger fine print of Budget 2026, isn't it?
Yes, Karthik, I missed being on your show as well. It's an honor to be with you, at least the subsequent day to a budget. Yes, you're absolutely right. The market was far more upset than it deserved to be, in my opinion, because, of course, the trading volumes can come down on the futures side. Price discovery becomes a little more difficult. That's my belief, point one. Point two, STT is a very unfair tax. So it's not actually about STT. It is about not being pro-capital markets. See, already we are the most inefficient derivative market. I'll tell you why, and I'll back this up with data. Okay, you go to the Nifty 50 stocks. There's one stock which will quote at a 10% premium per annum in terms of roll cost. There's another stock at a discount.
Okay.
This or 2% premium. This should ideally not exist in the top 50 stocks because an arbitrage fund with 1.5 2 lakh crore AUM should get out of that stock which is giving a lower arbitrage and move to a larger arbitrage.
Absolutely right.
It doesn't happen because the transaction cost eats away most of this differential.
True.
When I asked a fund manager, why would you be in a stock which is giving you only 2% till expiry?
It's because of the STT.
STT.
And now that has been hiked.
That has been hiked. So
right.
The disparity of roll cost in Nifty 50 companies. Now, mind you, those are the top 50 companies of the country. How would, as an FII, if I'm sitting in the US, if I would say that if the collateral damage to save a retail investor and demotivate him, if you're going to do collateral damage to inefficiency and bring in inefficiency in the market, which is not very pragmatic. Second, why should an arbitrage fund as a community of investors pay 800,000 crores more to deter a trader?
Absolutely.
Right? He's not taking the risk. So this is not seeming logical.
You're right, Feroz. And if I can just add a little bit of perspective there for our viewers that perhaps, the retail trader dabbling in FNO may not be on those small volumes that impacted by a second decimal point change. But the arbitrage funds that you're talking about are the ones which, for them, every single tick in the second and the third decimal place makes a difference.
Absolutely. So people, if the ministry forgot the fact that there are four kinds of people: individual speculators, institutional high-frequency traders who are also sometimes speculators. Third is arbitragers. Fourth are hedgers.
Right.
Now, if somebody is issuing a structure product in India on Nifty, he has to hedge his liability. He's got nothing to do with speculation. He has a liability. He's hedging that liability for the next 3 years.
Right.
So he keeps rolling over 36 months. Now he pays a larger cost. To deter one community, you can't penalize the other two, who are actually 60% of the market.
Right.
So that's one. But I personally think this is a buying opportunity because the trader fraternity, the FI fraternity, has already sold on the pretext of all the global uncertainty. So there's not too much left in their hands to express their displeasure. Is why today you see some degree of stability. If they were still having lots and lots of money, the active FIIs, not the passive ones, they would have dumped more today.
Right.
So they're upset, but they don't have too much stock
to show how upset they are. Right, and I think that is the kind of buying action that we are seeing today because cheaper valuations, obviously, after yesterday, the markets had tanked. But I want to understand from you, did Budget 2026, Feroz, have anything in it to attract FIIs or even FDI, for that matter, back into India? Because one was expecting that there are going to be at least some policy announcements on ease of doing business, on assurance of capital return, which would have at least motivated some money to come back into India, especially at a time when we are seeing the kind of depreciation in the Indian rupee.
Yes, Karthik, I think one nuance which is not being spoken enough, which can bring in some stability in the small cap stocks in the year and a half or two to come, unless they change it back again. If they do, the buyback tax, everybody is excited about the reduction in tax to a retail investor. That's actually very little a quantum. So a retail investor was anyways not in the 30% slab, right? There are 3.5 lakh people in a country this large with a greater than 1 crore Form 16. So coming back, I am very excited about the buyback tax being differentiated for the promoter, corporate promoter and the individual investor, not because of the tax saving, but the frequency of buybacks will suddenly shoot up. They had come down. See, what used to happen? Now, let's assume you're a listed company. Karthik Rai is the chairman of a board of a listed company. He sees 2,000 crores in his reserves. He sees FIIs have dumped his stock. He wants to extinguish. He wants to buy back the stock, reward the shareholder by a buyback, and extinguish the stock. And it in turn, as a collateral benefit, shores up the stock or gives stability or gives exit to somebody by participating in the open market. Now here you see the NSE small cap 250 stocks, total balance sheets in terms of reserves is one of at the peaks. Now they're not able to do buybacks. So the frequency of buyback going up is what excites me rather than the tax differential for the buyback.
All right, so that definitely seems like one green signal coming for investors as far as the budget goes. At this moment, let me also introduce Mohit Gang, co-founder and CEO of Moneyfront, who joins me on the show. Feroz, do stay with us for a moment more. But Mohit, I want to first understand from you, also, in addition to this share buyback, which is definitely potentially a positive, there's a major negative which has come as far as personal finance goes, and that is about buying sovereign gold bonds, the SGBs, from the secondary market, and they're going to be taxed as capital gains on maturity. Now, that was a very, very smartly hidden feature within the budget. But overall, the government is obviously feeling the pinch with the sovereign gold bonds. But for investors in that instrument, a big negative coming from the budget?
Hi, Karthik. Good morning. Always a pleasure to be on your show. So look, I think, there are these kind of googlies hidden around in the budget, which always appear post facto. And I think this SGB buyback, the SGB taxation was one of such clauses. Honestly, I think, look, to clarify the effect first, anyone who has bought SGBs in the primary market as a direct issuance from Reserve Bank of India, the taxation there is no taxation, right? So that continues as is. But because of the kind of abnormal gain, which I think government thinks that investors have made in this instrument, and obviously the government outlay on this instrument at maturity will be massive, I think they're just wanting to collect or mop back some amount of that gain via taxes. So if anyone has bought SGBs in the secondary market at maturity, now these will be taxed as capital gains. Yes, it's a dampener, but the kind of returns investors have made this in this instrument is astounding. And because of that, I think there was a lot of secondary demand and a lot of high premium going on in the secondary market on SGBs. So my sense is that the premium might disappear now because of the taxation. And look, you can argue it both ways. This wasn't necessary, but from a government's perspective, I think they just want to collect back as much as possible from this instrument because they're losing a lot in this one.
Right, stay with me, Mohit. Feroz, while we're talking about gold, let me also get your perspective on both gold and silver. The kind of volatility that we've seen First the astronomical rise and then a historic crash like we haven't seen after 1980. Overall, for let's say, retail investors at this moment who were first living in FOMO that they've missed the rally and now they're thanking God that they did not participate at those levels, what should they do now? Which direction are commodities likely to take from here? And what should their asset allocation with respect to commodities look like?
Karthik, I've been saying this one thing which I'm repeating on your channel, that silver is not silver at all. Okay, there is a very profound thing I'm trying to say here. Okay, it's difficult to understand. Silver is not silver. Silver has become a trading underlying in Chicago Mercantile Exchange to gamma traders. Gamma traders are those who are not worried about the direction of the underlying. Like one of the institutions which SEBI alleged that they used in Bank Nifty, that's the exact same trade which can have been identified by the gamma buildup. What is gamma buildup? In an options market, the options which are there out of the money are a very high gamma instrument. So, of course, in the world of AI, I can use a word and let it be and not worry about explaining, because the viewer can actually go to one of these AI platforms and ask them to explain it.
Sure.
So what I'm trying to say is that silver is not silver. That's why an asset behaves very differently in a specific period of time.
Okay.
Right? Gold has never behaved like this in the billions of years.
Right.
Why did it behave at a volatility of 72 standard deviation for the last 7 months? It was not because it was gold, it was a gamma trader. Why did Oracle in the US on a specific day, 11th September last year, go up 42%? Why did India's Infosys ADR go up 37% on one result? Those are all gamma squeezes one has to understand. So if you want to be in gold, you have to stagger. You can invest in gold, but if you stagger it in 12-14 months, you will actually buy gold and not the gamma of gold.
All right, so buy gold, not the gamma of gold. I'll also have to use some AI to really understand the details of that. But Mohit, what exactly are you advising your clients at this moment? We were talking about asset allocation, in the end of December last year. And I think we had come to some sort of a conclusion that potentially a little more allocation towards commodities might be a better strategy for 2026. Are you still on the same page, or do you think the traditional sort of 70-20-10 is a good asset allocation as far as 2026 goes, especially in the post-budget and the kind of volatility that we've seen in commodities?
Oh, absolutely, Karthik. I stand by what I have reiterated on multiple forums during the year-end asset allocation view. So I'll just again repeat. Number one, we are extremely bullish on large plus mid-cap kind of universe. We are completely out of small caps, and I think I've repeated at number of forums that small caps for me this year is a no-go zone unless market shows a comprehensive sign of rebound and momentum, which perhaps could be second half of the year, but we'll have to look and assess that. On the commodities front, I think it's been a very categorical call from our end. I think the first time when silver touched or breached $80 an ounce mark, that was the time when we gave a loud shout out to all our clients for profit booking. And we continue to maintain that stance that silver is now in a completely frenzied zone. It's a highly speculative zone. So one has to trade out there in extreme caution. But on gold, we remain extremely positive and bullish with a 3 to 5 year kind of a view. There could be interim corrections, but from a risk reward perspective, as compared to silver, we are extremely bullish on gold. And given the geopolitical setup, given the global narrative, given the way countries are trying to align with each other and whatever, given if at all there is some merit in the de-dollarization concept, I think if there is something out there, then it will all catch up and build up in the coming 3 to 5 years. And my sense is gold will continue to hold steady during this phase. So it's a hedge against the system. It's a hedge against the dollar hegemony. It's a hedge against the US tantrums currently. It's a hedge against the geopolitical tariffs and the geopolitical risks currently. It's a hedge against your currency, and it's a hedge against any other global currency, right? So gold continues to, for me, remain a bullish call. Yes, you have to be cautious given the volatility, given the kind of frenzy which is happening in both the commodities. But I agree with Feroz on that count that you have to cautiously get into the metal. On a slightly lower time scale, my sense is maybe 3 to 6 months is something where investors can again look up to build gold. and I'll stay away from silver for some more time.
All right. Okay. I have two final questions since we are really decoding, the impact of Budget 2026, especially on the common man. I'll ask one question each to the two of you. Feroz, first up, that reduction in sort of, the custom duty when it comes to personal items from 20% to 10%. In spirit, does it go against the concept of Atmanirbhar Bharat? Because the government does seem to be sort of assuaging the concerns of the depreciating rupee. So now foreign imports for personal use coming at 10% import duty, rather 20%. But does it go against the spirit of Viksit Bharat Atmanirbhar?
I don't think so. These small tinkerings are generosities, which are logical.
Okay.
Right? If you look at what the government does to shore up exports, you look at those iPhone lines of assembly. We today export $23 billion of iPhones, up from 17 just a year back. 2017, we were importing iPhones.
Right.
So there is a lot of balancing factor. So you distribute benefit, concentrated gain. Is a concentrated by a balancing factor is always good. So you distribute the gain of what you've done from 2017 in electronics.
All right.
By exporting iPhones.
Okay, so generosity is the word coming in. And finally, Mohit, my last question to you this morning. That TCS reduction on foreign travel, on foreign education, on foreign medical treatment, now overall coming down to 2%. This was a very, very controversial sort of, TCS introduction about 2 years back. But the fact that the government is trying to now rationalize that, a move in the right direction?
Oh, absolutely. Absolutely. I think the intent when it came in was only to figure out people who are doing consistent foreign travel and spending a lot abroad or overseas, right? So you can actually get the data by 2% also. You need not charge them 10%, 15% for that effect, right? It was a drag on travelers. It was a drag on education as in students. It was a drag on many fronts. And I think even 2% to me is a higher number. But yes, I'll take it with both hands, whatever comes.
All right, well, let's leave it at that. Feroz, Aziz, Mohit gang, thank you so much. As always, a pleasure speaking to the two of you and for really simplifying all the fine print of Budget 2026, especially when it comes to personal finances and the markets. Thank you so much for your time. With that, we will slip into another very short break. When we come back, Sridharan will be joining us to tell us the not too positive side of Budget 2026. Did it really miss a spark? We'll get that and more on the other side of the break. You are watching News 9.
टाटा कैपिटल 2 व्हीलर लोन्स के साथ इसने की अपनी नई बाइक की जिद पूरी।
Ever wondered what makes the night come alive? Where flavors, lights and laughter dance in harmony. When the sun sets, stories rise of kitchens, cocktails and charisma. What makes your city's night so happening? Let's find out.
Good service, good food and a good location.
You need to explore, you need to experiment.
But they will never forget how they felt when they came to your restaurant.
Being a chef, it's my priority to deliver taste in a plate with good presentation, unique innovation.
My definition of mixology would be to get people drunk in a safe and happy way. Don't drink on the job, that's for sure.
Mixology, you can play around with anything. You can create the stories, you can create the recipes.
Let's cheers on that note with our friendship.
Indulge in the finer things in life with Radico presents Lounge Nights. Discover the creme de la creme of India's culinary and nightlife scene. From trendy bars to exquisite restaurants, we've got you covered.
Welcome back. You are watching our coverage of Decoding Budget 2026 and what it really means for you, the individual, the salaried class, the middle class of India. Now, joining me this morning is Sridharan. Srinath, thank you so much for your time. We missed having you yesterday and we also missed that sort of critical analysis of Budget 2026 and the counterintuitive aspects that you often bring into our conversations. But I want to ask you, Budget 2026 spoke a lot about MSMEs, fisheries, capex outlay, services sector including tourism and medical drugs. But beyond all this, there's something called sentiment, and that sentiment seemed absent from yesterday's budget speech that Finance Minister delivered. while on the surface of it, there's nothing really to complain about the budget, but nothing really to celebrate either, especially when it comes to the salaried class, the middle class of India. What was that missing spark from Budget 2026?
I mean, let me be probably as blunt as I can. I think middle class has been left out in the entire policy thinking itself. I think it shows lack of creativity and inspiration to think about what to do for them. I'm almost tempted to say, are there no elections around so that there is something for the middle class? And unfortunately, no. Of course, we understand that there is very less leeway fiscally. Simple things like the public capex, the government capex coming in higher also shows that despite the supposed confidence that India Inc. has on this government, private capex has not come in at all. So the middle class, unfortunately, has been left out in the entire policy narrative. But of course, from the policy aspect, I want to bring one question. I don't have the answer, but probably more a question, curiosity to say that isn't the first time that the budget exercise is missing the entire layer of bureaucracy available. We don't have a functioning quite a few bureaucrats in the finance ministry.
Yeah.
And is that reflecting in such an uninspiring budget, despite the volatility, the uncertainties geopolitically, all of that is aside.
Yeah.
So I have a fear that probably the dream team as was seen is no more the dream, probably is just fantasy.
Okay, so the dream team is definitely one player down, but you know, while we understand the missing sentiment as far as middle class, as far as especially individual income taxes go, the government could argue that a lot was done last year. Perhaps last year's budget delivered for the middle class a lot higher than the expectations were, but even on the industry side, even on the reform side, I think a few big misses include no expansion of the PLI scheme, no revision to the PLI scheme, because there have been some great beneficiaries of PLI and some absolute duds. One was expecting that there would be some reform on the PLI scheme. That was a big miss. And again, complete, absolute radio silence on climate goals, climate financing. The budget was supposed to be a reformist policy outlook for the future, but both these critical industrial as well as sort of social sectors were given a big miss, in my opinion. Do you concur?
So I do concur. I think while they have attempted to make it a strong state capacity-led budget, but it has reflected in a weak household confidence and a weaker corporate confidence. I mean, I'm not even alluding to the stock market reaction to this. But what kind of intrigues and surprises me is that almost a lot of points in the economic survey have not been factored into the budget at all. So is there a lack of coordination? Have they not thought this through? Have they not done enough stress testing of the data and the projections?
Anything specific, Srina, that pops out, which was a big emphasis in the economic survey but did not make it to the budget document?
So, for example, the ease of doing business, and if you link it to manufacturing sector, the reality is there's a growing trade deficit with China. If you want to catch up with China, financialization won't solve for it, but industrialization only will solve for it.
But the government will argue that it is reducing import taxes on components for electronics, a 40,000 crore rupee outlay. It is sort of, you know, giving you tax concessions on importing machinery that goes into rare earth, critical minerals mining. So the government is saying, could potentially say, to your point, that, you know, we have given these SOPs. Beyond that, it has to be the private sector that has to become competitive.
So yes, the challenge there is this, Karthik. I mean, let's look at it in two segues. One of it is the economic segue, and the other is the sentiment segue.
Yeah.
The first one is economic. Any budget has to address short-term, mid-term, and the long-term. Structural reforms are to induce confidence and capability over the next, let's say, 5 to 10 years. Mid-term, probably 3 years, and short-term is now giving instant relief. So this budget probably attempts to do some of the long-term, but not really. And on the sentiment segue, where is that corporate India confidence? And I've asked this before, and we've had this conversation many times.
Yeah.
Every time, right after the budget, if you look at the scores given by the corporate captains in India, it will be 8 on 10, 9 on 10, 10 on 10. But why are they not investing? Why are they diversifying their family offices to put money abroad?
Yeah.
So some of these are the questions which the political narrative has to actually address. And I think that will never reflect in the budget day. It has to be more of the politics of it, saying, if that were the case, what is the real problem? Let me give you a quick analogy there. Let's look at, let's say, MSME. MSME, a lot has been done, and I think the last 3 years ago, when we brought in the ability to look at export competitiveness and stuff like that, these are, I think, what frameworks get created can we get bureaucracy out of that? Can we make it market-led? Why is it that anecdotally, if you speak to MSME and SME, they still don't get credit access, they still don't get a lot of this percolating down to them? So my worry is, are we doing more of these as narratives saying Maine to de diya and it is not percolating down? Because MSMEs are not going to come all the way to Delhi. If I'm sitting in Bathinda or Ludhiana or Coimbatore, and that is where I need my action in my language of what it means to me. And I travel a lot, and I've heard enough people not realize what is available in various of these schemes. Okay. And I think there is a challenge. And what to me this budget doesn't address, Karthik, we have a larger challenge, is the unemployment situation, which the economic survey addresses. The budget is completely silent about it. Completely silent about urbanization, climate change, as you said, but more importantly, urbanization.
Absolutely.
We have a large challenge of increasing urbanization, and our cities are collapsing. And this is completely blasé about it. So to me, politically, it sounds as if it is just a tick mark, yet another statement of accounts that has been delivered without thinking through policy direction at all.
Absolutely.
And I'm also very mindful where in the previous years, whenever we have had a chat, I've always said, why is the media making budget day a big day? And reality is, it is coming to bite them because you made it so big and you're not delivering on that.
Absolutely, you're right. But again, just to play devil's advocate here, Srinath, there was a conversation we had during the economic survey with a few experts, including former bureaucrats, and one of the points that emerged was that unemployment, skilling, these are subjects that the centre at best can have capital attribution allocation to. But at the end of the day, creating jobs, creating skills is the job of state governments, state budgets and the private sector. So the union budget and the finance minister can turn back and say, hey, we are giving an equity fund 10,000 crore rupees for MSMEs. Now, how states sort of use money from there is something for the states to decide and not really for the centre to.
I'm glad that you said this. So it also brings me to the other favorite topic that most of the media has been discussing last 2 weeks. So we are saying that then why do our chief ministers all rush to Davos? End of the day, if they have to look inward at his capability, they better not rush to Davos or Delhi. Actually, look at their own state.
Look at their own states. Go to their own industry clusters and understand firsthand what the issues are. Because at the end of the day, the banks will also say that, hey, I've got to keep my books clean as well. I don't know whether the MSME who is coming knocking at my door is credit worthy or not. Because if my NPA goes up, I get a beating down from RBI.
See, that's true. But again, to be fair enough, the banks are also, they will have to reimagine themselves as social engineering institutions. Banks are not just about capitalist institutions. They need to make money. And which is why the concept of your priority sector lending is there in the first place. But the reality is understanding MSME cannot come from sitting in the desk and running simple Excel sheet models. Each of the state or each of the cluster, each of the district, each of the segments in MSME and SME are very, very different needs and wants and gestation period of capital cycles. That's something I think we have enough data available. We have enough, I think, even talent available. But trying to do it at the macro level, Karthik, I think the last session, I think we'll have to look at it. If states in the center can come together very well and despite the criticism or whatever sort, work on a GST council, can they do something better in some of these?
Absolutely.
Which means that we all speak about Viksit Bharat. It cannot look like only the center-led program. It should be a national-led program. And I think that, to me, was missing in this entire budget.
Absolutely. Well, final question to you, Srinath. We are almost completely out of time, but I really want to understand what next, because budget is done and dusted. Cabinet has approved it. Opposition, as expected, has criticized it. India will move ahead, but India's quality of air, quality of water, quality of life will stay just the same. How does India from here progress towards Viksit Bharat?
So I think first, if we decide that let's look at human dignity, quality of living, I think that is far more important because I was always said that the numbers are one part of looking at, let's look at the per capita GDP and so on and so forth. Even today, the per capita GDP, if you remove the richest 100 Indians, the per capita GDP nearly drops 40%. So the reality is we are a low middle income segment country. We are not even a middle class country. And in the political economy, we have a large middle class, sentimentally and financially.
Correct.
And that is where it kind of hurts. How do we make their life better? And how do we give them confidence? And I think the feeling of a proud, I am an Indian, I stay here despite this. And I think that is more and more visible. Simple, the last couple of months, NCR and the northern part of the country inundated with quality of life. Similar is Mumbai, where I live. And if you look at a lot of other states, seem to be jumping the development back there.
And that exactly was potentially the missing spark and the missing sentiment from a financial policy statement like Budget 2026. I'm sorry, Srinath, we are completely out of time, but we can carry on and on discussing these issues and more. But for today, let's leave it at that. Thank you so much for your time, Srinath. And with that, we come to an end of this special edition of Decoding Budget for Bulletproof Bharat. Or was it really bulletproof? Well, that's a long question mark that continues to loom large. We will leave it at that. Thank you so much for joining. News continues right here on News 9.
इम्तियाज जी के फादर को बीमारी के कारण अचानक हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
With Skoda Supercare and growing network across 180 plus cities, you never drive alone. Skoda.
फाइनली हमारा घर।
तुम्हारी जिद का नतीजा।
मैं नहीं होती तो तुम्हारा क्या होता?
इनकी जिद ने आज इन्हें दिया एक परमानेंट एड्रेस टाटा कैपिटल होम लोन्स के साथ।
तेरी एक जिद और फैक्ट्री वर्कर सब डबल।
रिटायर हो जाऊं क्या?
अच्छा, प्रॉपर्टी के अगेंस्ट लोन का आइडिया किसका था? पर बुढ़ापा आ गया हो।
इनकी जिद ने कारोबार भी बढ़ाया और रोजगार भी। टाटा कैपिटल लोन अगेंस्ट प्रॉपर्टी के साथ।
With Skoda Supercare and growing network across 180 plus cities, you never drive alone.
Skoda. Red Fort explosion. Let's get you all the updates. Following the blast, there is of course a South Indian connection of Dr. Shaheen Shahid. Because this is news of national import that search operations are underway across the entire Al Falah University campus. The blast killed 12 people. Prices, however, of Nandini ghee have been hiked. KMF has defended Nandini is the brand. I've been getting a lot of queries.